Hey traders, Raghee here, and in this video we're going to go ahead and take a look at two markets, one pattern, and something I think that's going to usher both these markets higher. Gold's already doing it, so let's take a look at the pattern somewhat completed, and then we'll go ahead and apply that to the bond market. So here is what we're looking at in gold. All right. So gold sells off. It's a 2.5 times daily price movement range, volatility move, volatility sell off. We get the minor low pattern completed. Now, we talked about, if you remember in the video, it's a 3-candle pattern. All right, so there's the 3 candles. The lower low, which is this, is surrounded by a higher low and a higher low. So you've got a lower low surrounded by 2 higher lows. That's a minor low. The next thing we're looking for is some sort of threshold from which to say, yes, price action has taken out a significant resistance level, and now we're going to likely see more momentum. For us, it was 1955, right? Roughly taking out the major psychological level and basically taking out the high of that lower low candle. That was 1961. So 1955 to 1961. The idea is once we take out that range, I liked the lower end of the range. It gave me a quicker entry long. That is going to complete this minor low, which, look, the minor lows are really old patterns. There's no one way to trade them. There's no, well, this is the way to trade them and nothing else. You have to work with what you've got. You've got to think about the surrounding levels. And, here I've got a value area low for the month of August. Here I've got the high of the lower low candle. We've got a major psychological level, the 1950. So there's a lot of things I can work with as far as thresholds to the upside. Other things that I'll look for significant volume levels. And I don't mean volume on the day. I mean volume in terms of price-based volume. And one thing I found really interesting is there was a stack of volume levels up to 1961. So we had it was actually a wide zone. It was a wide zone that basically took you from 1928 to about 1961. And then getting above 1961 to me is almost like this market just breaking some shackles. So that's the minor low, and that's the long that we have in gold futures and GLD. Now, what does this have to do with bonds? Well, in some ways, these are not unconnected because gold is a play on real yields. It's not a play on the equity markets, right? I think a lot of people think, well, equities are down, that's why gold is up. It's a real yield play, always has been. So if I'm looking at the move in bonds, it's not disconnected from that narrative. However, what we're waiting for, and I thought perhaps we were going to get our lower low here, no doubt. I thought, okay, value area low right there, this line right here, that's my value area low. And then if that was going to be one like that, there's my minor low. Well, the market had other plans. So now we're actually getting down to this level here. This is a really big level. This is no slouch of a level. This is the point of control for 2020. This is the highest volume price level thus far this year. That's huge. That's really, really significant. It's going to be, for me, very important that we hold that level. And one of the things that we're looking at is treating this entry, because it is a sideways market. It is not a trend follow. This would be an aggressive entry. This would be a conservative entry. And one thing I was waiting for before I send an alert out to members, and now I can be even more conservative. I could wait to see if we can get just a candle tomorrow that gets up off that low. But really what I was looking for is a certain unwillingness for the market to close below that point of control. I have plenty of bearish momentum. I've got a good bit of resilience. above that point of control, and then I want to check some volume. Now remember, point of control is a volume level, no doubt about that, but what are some other significant volume levels nearby? The two levels that have my attention that I'm a little concerned about are a little bit more near term. That's 178.5 and 178.13. So those are two levels that I'm watching really closely to see if we can stay above those two. We can break back above those levels. Nonetheless, I think this does and has, as the day has progressed, shown that the point of control does have some conviction. So I'm going to look at this as a second leg long in the 30-year bond. Hope that helps. Similar pattern, minor low, looking at nearby volume levels for confirmation. Build a long position. I'll see you in the next update.